What is happening today, YouTube? How are we doing? Welcome back to another episode in which we are going to be getting over Nio, and then we're going to be going over RR or Robotics, Tech Robotics per request. Make sure anything you guys want me to cover, I will cover. Just drop it in the comments below. But today, I just wanted to go over my bull case thesis on Nio. There's not a lot to cover, but there are good signals going into the week. So this is kind of like my what to expect kind of video, right? But let's jump into Nio here because you closed the week in one of the most beautiful manners I could have imagined you doing so. And that is with a green long wick hammer candle, baby. Super, super bullish thing. Inherently typically means a reversal to the other way. And if we took the price target from this falling wedge or flag formation, that would lead you to another higher high, right? And Nio's been kind of following this to a T, leg stair stepping every step of the way. You took the flag there from the bottom, you got this top. Now, if you take this flag, take this flag and put it onto this one from this breakout, right? That gets you almost perfectly in line with the 200-day EMA on the weekly time frame, which is what I like to call technical confluence. It's what I look for when I look for these potential trading formations, is what is going to make the most sense and what is going to lead to these macro indicators. And I think it's highly overlooked while trading. You could definitely argue that this would see some kind of reversion. Oh my goodness, share offering, it's going to the dirt. But that's not the case here, guys. I don't think so, at least. When you look at the hammer candle that was printed on increasing volume, right? Let's look at the harmonic volume. You see increase, a ramp up in green, and then consolidation in red. Ramp up in green, consolidation in red. You now have your ramp up in green with a beautiful candlestick formation. Whoops, that was a burp. A beautiful candlestick formation, and I think that this thing may be gearing towards a cent higher, right? When you look at the hammer candles, these are just a few, but this primarily is a very, very bullish reversal signal. And I wanted you guys to kind of understand that it's a beautiful thing. What it's doing right now, if you know the charts, if you know the candlesticks, and hopefully this helps to understand, that's a literal hammer. Hopefully this helps to understand, but this is a beautiful position for Nio Stock. And I couldn't be happier with how this thing closed the week. But I also wanted to talk one step further. We talked about the potential price target, right? What's the 200-day I'm at? 950, let's say, give or take. 950 right before that $10 market. It looks like they're trying to get you guys psychologically. 950, and that is in line pretty much exactly with that price target from the flagpole. So do not get faked out. Could it go to $10? Absolutely. Is it likely? I'm not sure. I do think that I would see like 940 to 950 zone on this stock. So, but let's get into the busted pattern because that was the highlight of last week. That was your largest volume on the week. It was this share offering that gapped you down almost 10%, and that's going to be critical when I speak in just a second, so pay close attention. Almost 10% busted pattern. It was 8.92% to the downside, in which you recovered with two back-to-back bullish engulfing candles. So almost 10%. Why does that matter? It matters because a busted pattern in trading refers to a chart pattern in which the price breaks out in one direction but moves no more than 10% before reversing and breaking out in the opposite direction. The pattern is often characterized by a strong move in a new direction, which can be more profitable than the initial breakout. For example, a double top can be busted when prices move less than 10% after the breakout before reversing. This is a busted falling wedge. And I say that because you saw a red doji after a 8.92% move to the downside and then a strong reclaim of this wedge. Now, could you do something along the lines of this? Consolidate into the pinnacle of the wedge and then break to the upside? Yes, you absolutely could. Would I like to see that? Kind of. It allows for a greater constricting of price, and it would be very, very easy for an entry right here along the uptrend. Do I think it's likely? I don't think so. I think with the bullish momentum of the false breakout or a busted pattern, I do believe that you see some kind of move earlier than this. Now, you could look for a possible point of reversion at $8 from this top trend that tapped you twice or thrice, actually, 1, 2, 3. You could look like for a reversion right here at 8 to 850. Now, I would personally anticipate it to get the full price target from the flagpole. So put that on top of the breakout, and that, like we said, that 950 area is going to be crucial to watch on Nio next week, and it could happen as fast as next week. As you look at the weekly candles here, guys, when this thing is moving, it is moving from the top of the channel, or from the bottom of the channel to the top of the channel. This took 3 weeks of pure upside consolidation, and then this one candle literally took you from the bottom to the top, make it drop. So I would not be surprised to see that happen on NioStock, but just beautiful weekly volume after a selling off on lowering volume. Could not say enough on NioStock. It looks really good. So that's my analysis going into the week. I would anticipate you end somewhere either between, where is that? Like that crucial line at 560. I think you hold 560 no matter what, because that is your crucial horizontal resistance or support. And I believe you will end somewhere in the $7 range, which, hey, that's a beautiful thing. We've been covering this stock since 3, so I couldn't be more happy. The only thing I will say is I'd like to get in on this stock. This thing has not given me a single opportunity to get in on it. But that being said, right, this is just TradingView. If we wanted to look at it from TradingView's lens, horizontal resistance is not few and far between, unfortunately, but that is our major resistance is horizontal. You can see 771 you tagged multiple times as support and resistance. So once you do get into that $7 range, that is an area to be looking at. Tagged it perfectly here, the high 771. Bounced off of it, uses support, bounced off of it, and then going all the way back to IPO, you rejected it here, broke above it, and that's what really sent you higher. Rejection, bounce. So, and no, that's 550 or 560. But that 771 mark, very similar to 556 or 560, is crucial horizontal resistance. And the same way that you came back, you wicked off of it. Couldn't be happier with that. That is just the bulls absolutely stepping in to send this thing higher, confirming old resistance as new support. And if you are a bull, you would not be happier than to see that happen again and again and again as you continue to stair step this thing to heaven. I absolutely love to see what we're seeing on this stock. Going into the monthly, I'm curious to see what we see. So the monthly currently is printing a red doji. Not the end of the world, but I would like to see this print as an additional solid body green candle, just like you had back here, right? You had 1, 2, 3 white soldiers before sending it almost, when was that? 19 into $60. And I'd like to see 1, 2, 3 and hopefully closing around the high 7s to bust you out of this long-term macro accumulation. You could see 770 on the monthly time frame is even more critical of horizontal resistance. You can see how many times you rejected it, used it as support, broke below it, rejected it, used it as support, broke above it, bounced, rejected. So 771 on the macro chart, I would say arguably is almost more important than 560. So closing right beneath it, I think will give you the firepower with 3 white soldiers candlestick. In case you guys don't know what that is, we talked about the busted pattern. We talked about the bullish hammer. 3 white soldiers candlestick pattern. And this being, guys, 3 white soldiers on a monthly macro time frame is only going to be absolutely nasty. It's going to be strong and it's going to be crazy with the moves because if you don't know, as you kind of zoom out, the longer scale that these patterns form on, the crazier bullish they become and the stronger the move should be expected from it, right? This is a perfect 3 white soldiers. Now, they can be imperfect. Everything can be, right? But this is your iconic look, and you are not far from getting that on Nio, guys. You're really not. You just need to help. You really need the bulls to just step in. Let's be honest. And I think if you get that breakout of the falling wedge or the bull flag here and go up to that $9 to $7.71 price target, in which you'll start to see some resistance, I believe you're going to print this 3 white soldiers, which is the absolute best case scenario for Nio. If you are a bull and you print that, I am going to be pounding my fist on the table, saying that this thing is primed to see some kind of squeeze-like move going into Uptober. It's only up, guys. Yeah, right. I wish. But 3 white soldiers, you printed it 1, 2, 3. And from that, let's just get a analysis right here. From that, you moved an additional 327%. So honestly, I think you get 3 white soldiers. I'm not saying $100. I'll probably never say $100 just because it seems very facetious. It seems very radical, right? But that $27 price target in which we have a gap fill. I do believe that could be possible here. In a very extended move, you could expect Nio to come back all the way to 771. And those kind of swings are not unknown to Nio, right? You went from 116 all the way up to 560, back down to $2. Those are all 100% swings. So I would not be surprised to see as rates are cut, as risk on assets come back, right? You saw it with Dogecoin just this weekend. Dogecoin going up to 30 cents. Typically, Doge is the front runner of those risk on assets. And so when I tell you that risk on assets, specifically the index of them, IWM, looks primed. IWM could make an all-time high. And this could be, along with rate cuts, further catalysts to send this thing higher, just like it had back here. And fundamental news helps, yes, but what we're really looking at is the perfect storm kind of accumulating for Nio Stock. And I love to see that going into this potential breakout. So that is what I have on Nio Stock. Make sure to slap the subscribe button. I love each and every single one of you guys. Let's get into RR per request and stick around if you guys love me, because I love you guys. You can see that Robotics, and I zoomed out here on purpose. You can see that Robotics closed the week. Where did it close? So it closed literally right above the 200-day EMA. That is a train. So it closed literally right above the 200-day EMA. Now that is very, very bullish. But what's going to matter is when you open up next week, you want to see us gain that as support to bounce off of it. And I'll be watching pretty carefully to see if that happens. Otherwise, right, you could be looking at a potential double top formation. And I say that because Friday's close was not the best. Typically, every time you get a red doji in key resistance areas, that acts as a resistance and a turning point in the stock, because dojis are seen as indecision. They're seen as reversal points, whether it be for bulls or bears. Dojis really do say, I don't have enough firepower. I can't move this thing. And then typically the other side will step in. Now, does that have to be the case? No, you could flag out here and then go higher. But I do see some kind of double top here for robotics and a drawback to the 50-day EMA. I say that because seeing a doji at such key resistance typically means you're going to reverse. However, there are other things to look at on this stock. You could see on TradingView, you take your longest key resistance trend line. You've broken that. And not only did you break it, you tested it perfectly on a retest that took you higher. I would not be surprised to see a drawdown to test it again at 274 before you absolutely send this thing to Pluto. And I say to Pluto because your last horizontal resistance, major horizontal resistance, is here at 415, in which you rejected here, pumped above, hit that trend line, established a new resistance, and then this was your key support on IPO that bounced you from $6 up to that double digits, $12, right? So that's going to be critical to see how the stock opens up next week. Now, we were talking about this thing all the way. We were talking about this thing all the way back here. So this is not financial advice. I'm not saying FOMO into the stock. In fact, I'm saying the opposite. This thing is very overbought. And I would be very careful if you're looking to enter a position here. But that's just me, right? Not financial advice, not that guy. But if you're going to enter a position here, I'd be very, very careful. And if I was to get in at this the last stop for resistance here, and a retest of it, I would hold a very tight stop loss because it's sketchy. It's very sketchy. Something to look at here, though, just for price target sake, I did take the longest term uptrend here, which you tapped back in 2024 of August and then established right here in October of 2024. You fell below it, used as resistance, broke above it, used as support, and then launched. You have tapped that trend line absolutely perfectly to the upside. So if you're seeing that up thrust, you want to see us break that. Otherwise, you're going to get pretty rough in rejection territory. Every time you broke this and got above it, so broke it and then potentially getting above it would lead to an absolute full send launch. And I would be covering if Robotics does do that. It's an interesting spot. I personally would let it cool down before seeing any further upside, but $3 alone is a pretty tremendous accomplishment on this stock. Now, this was technically a bull flag after a pump up, and the theoretical price target would take you up to $11. Now, that is on Webull, which I have on log. Do I have this on log? I think I do. Just for good heart, let's go to regular. Because log price targets can be skewed. Logarithmic is typically the charting system that big institutions use. So I like to use it because a lot of smaller niche trend lines can be established and identified easily, regardless of the stock. Because these linear charts can so often look like this, right? And you miss trends because of the radicalization of them. But regardless, this is a bull trend or a bull pennant, bull flag. And the price target of it, theoretically, from the breakout would take you up to $6, which you have resistance right from the IPO. So $6.55, $6.55, in my opinion, is your maximum extension here if you saw that break back above this based trend line. But now the chart, I've drawn so many lines that it's starting to look a little goofy. So that is going to be it for RR or Robotics, Rytech Robotics. I appreciate each and every single one of you guys. Thank you for remaining patient. Thank you guys for tuning in, and all of the love and support has been overwhelming. So I appreciate each and every one of you guys. God bless you and your families. Make sure to get outside, have a wonderful day, and keep being what makes you you. Thank you guys, and peace. I'll see you in the next video.